Okay, you're recording.
Cool.
We're ready.
Awesome.
Yes, sir.
All right. So my name is Jay Berg, and the protocol is called Protoblock, and we are the original football blockchain. So launched in 2014, and the coin is FantasyBits. And on the higher level is FantasyBits utilize to monetize skill and hedge risk, and we will get to that. So, oops. Okay. So major sporting events, professional major sporting events, the biggest ones in the world, are a phenomenon. When millions of people are watching the same game at the same time, whether they're live, whether they're at the bar, whether they're playing, they're gambling, they're playing DFS. And then after the game, billions of dollars are settled in casinos, in fantasy, all over the place. And this settlement happens without any central authority. It's been happening every Sunday for since the 1960s. In fact, we have been coming to decentralized consensus on public sporting event data since the Roman times. So what we're saying is that this data, specifically NFL or soccer, like the major events where all the humans are watching, this data is special and already has consensus. And this is like how we structure a whole product, saying that this data already has consensus and there's no one's arguing about this data. So we're able to bring this into the blockchain. So going back, where's my background from? As a child, at the age of 12, I heard about the stock market crash of 1987. And I knew my dad was in the market. I heard people were jumping out of windows. And, I got concerned. So I go after school, I go look for him, can't find him, he's not coming out of the train. Next thing you know, he shows up in a brand new Lincoln Town Car. Turns out he predicted the crash of 87, became the mutual fund manager of the year. And that basically began my obsession with markets and alpha, trying to figure out everything I could about, the financial markets, which led me to Bloomberg in the 90s. So I coded for Bloomberg, most of the technical analysis, equity stuff. And from there, I moved on to TT. I don't know if anyone remembers, Trading Technologies used to be in Evanston in 2000. So I went there and, continued my quest. We got a Series 3, Series 7, and then I ended up getting my master's in financial engineering, and then jumped into the quant space, where I worked with Mike Novogratz at Fortress during the high frequency trading craze, right before the top of the market. So that's my background. It's heavy markets and trading, and it's in my DNA. So Bitcoin came out. When I first discovered it, I realized this is where the alpha is going to be. This is definitely the most amazing thing. Creating money without a central authority. So I've been on the front lines ever since. Let's just say that I was actually the first one to tweet the Bitcoin ticker symbol. predicted Mt. Gox, kind of predicted this ICO bubble and subsequent collapse by suspending our token sale. And, one of the things that really unique is how this idea of equity and token, like a startup that has a for-profit and a token. We spent a long time analyzing these things, and it turns out that you cannot have both. You can't really have a system that tries to create value for equity as well as token. So we did something kind of unique. So we converted our VCs, our equity our notes to token instead of equity. So we're going full token, and I'll get to that in a second as to why. So that's kind of where we're at. And so the question is, how do you create money out of thin air? And how do you do it the right way? So Bitcoin, Satoshi gave a rule that every 10 minutes, 50 Bitcoin are generated. So back in the early days, the question was, where I was on a conference call with Dan Larimer, the guy who started EOS, and Charles Hodgson, and the question was, can we use this blockchain for other things, like decentralized autonomous corporations, and what are the ingredients needed to make money out of thin air? So we came to the conclusion that you need actual utility within the blockchain itself, non-zero utility, and it needs to be completely decentralized. And this is on top, instead of not the utility of Bitcoin as peer-to-peer cash, but a different utility. I was big into fantasy sports, and I came up with this idea that we could, the utility of betting and hedging risk in NFL, as long as we bring the data. So I wrote the white paper in 2014. A couple of people who've read it back then, Nick Szabo, read our white paper. He actually said it was amazing. I was sitting next to Vitalik the day of his ICO, and I said, "Hey, Vitalik, what do you think of this?" And he just made $16 million, which was the beginning of what we're at now. And then in 2015, I actually went to try to pitch this, and I ended up in front of Stanley Druckenmiller. So going back to the days of, growing up, this was part of the crew that was trying to beat the market. It turns out he's one of the best to beat the market. So he actually, funded the project, with like $500,000, 4 years ago. And then we were off to the races. And another interesting anecdotal story is this conference, Scaling Bitcoin. Joe Ito gave a talk that kind of saying that, we need to find a way to create projects without any speculative FOMO, without attracting speculators, without attracting, the people that are going to get hurt by just, buying, during this speculative craze. And this was years before the ICOs hit. So the question posed was, how could you create a project in blockchain without any speculators? So it turns out, simply, you just have no transfer transaction. So we actually did that. So one of the reasons why we're not on CoinMarketCap, or because we've had the first 3 years, we had no transfer transaction. So our coin has utility without the need to use it as a token. And this is kind of another unique thing about our project. So FantasyBit is the token. So we're harnessing the distributed decentralized consensus. So we already said that the current NFL game, the Chicago Bears game from last week, everyone knows what happened. So now to bring that data into the blockchain. So we bring that data into the blockchain by taking the raw data, the passing yards, the touchdowns, and turning it into fantasy points. And then each fantasy point becomes a coin, a FantasyBit coin. And those coins are distributed to whoever's the best at predicting that particular result. So now we have a way of starting so we started at 0 coins after the first game in 2014. The first play, the first game generated coins, and those coins are distributed to users who made predictions. So this is our generation and distribution. And then skip here, our utility. So now that you have, go ahead. So now that you have NFL data with consensus inside a blockchain, in theory, any single bet that's made to the history of time can be done on our blockchain without any fees being paid.
Wait, this isn't even in the Athena office. What's going on?
Hello?
It's a remote webinar, you goof. It's James.
Okay, upset banana. I like it. Jay.
Yeah,
Sorry, Jay.
Hey, Jay, that's
No
some
problem.
lieutenants of Athena.Trade that are now down in Miami.
Oh, that's nice.
The remote office.
Yeah.
Oh, nice.
Okay, so although obviously any type of betting on NFL data can be done for no fees, so all casino gaming, all fantasy sports, all that. But we wanted to actually create something that was a utility in itself, that was needed for the entire industry in itself. And whether or not we're on a blockchain or not, we solved another problem, a problem of monetizing skill, hedging risk. It's basically, we created a futures exchange for individual NFL players, where you could short your busts, you could hedge your positions. For example, let's just say you're about to win $1 million tonight. If I don't even know who's playing. If the quarterback scores,
The Redskins are playing the Eagles.
Yeah.
okay, so if Carson Wentz scores, less than 25 points, you win $1 million based on the entire week. And if he scores more than 25 points, then you don't win $1 million. So this gives you a way to take something off the table by shorting Carson Wentz. That's like an extreme example, but
Hey, Jay.
yeah.
Can you say the example that you told me last night about Stanley Druckenmiller?
Okay.
Explain it to him.
Right. So basically, let's say you're at the game, and it's week 16. It's your fantasy championship game, and Stanley Druckenmiller, Carson Wentz, let's say, is your quarterback, and then you see him limping on the sidelines. So what do? Do you go replace him with a backup, or do you start him? How do you know what to do? So all you need to do is take a look at our real-time charts. If the price of Carson Wentz is crashing, then you know he's probably injured, he's not going to play. And if the price is stable, then you know that he's fine. So this is kind of like the efficient market generates the ticks, which will enable everyone to get real-time information on NFL sports. And that's the story I used to sell Druckenmiller, because he actually tried to buy the Pittsburgh Steelers at one point. And so that was the story. Now, let me just show you how this works. Can you guys see this?
I think you have to go to a different screen because you're on the Zoom screen. That's the one that's showing.
Yeah, okay.
So there's a share button.
You see the Zoom screen now?
Correct.
Okay, so this is, all right, so this is Damian Williams, Kansas City, week 13 expected results. So basically, I mean, this is live. So every single time a trade is a tweet is sent out, and you know you have the ticket screen. So this is the end results of the gameplay. So that's a utility. Now let me just hold on a second.
I think I find it interesting that you've never ICO'd before, and that you had an interesting reason for doing that.
Right. No ICO. First, well, again, we have a fundamental protocol, decentralized protocol, that starts at 0 coins. There was no way to ICO, right? There was no coins to ICO, first of all. Yeah, I think, you know, I think when you do an ICO, you end up giving the founders an exit before they start. It's kind of like the high price. So, you know, that's kind of one of the reasons.
And then did you want to talk about the atomic swap that you just built or are building? And the reason what you want to use it for?
Yeah. Okay. Yeah, so basically, so we launched in 2014. It's a new code base. It's a new consensus algorithm. No ICO, no pre-mine, no speculators. Real utility. We're live. We launched in 2014. We launched the trading in 2016. And then finally in 2018, we launched the transfer transaction. So what we do in 2018, we converted our VCs to token. So we made the decision that we're going to go, we think the token has fundamental value, and as a company, we wanted to take away our control of the coin, so we divested our interest in the token. But we're at the point where, so we have a token that has value, has no ICO, and also there's no company with a for-profit. So the question is, how do you move forward? How does this project survive 10, 20 years with governance? So we're building this atomic swap so right now, for example, we need liquidity. So we need to get our coin listed. In order to do that, we want to make this marketing event in Chicago for the Super Bowl coincide with an event listing, right? Now, Now, the funding of this project, so the way we're doing it is we're having a three-way atomic swap where the exchange and the people that, the providers of the project will say what they're going to do, and then we will allocate coins to the project, and then the investors will send a Bitcoin and it'll automatically happen. This is what I'm building now, and it's a way to govern and invest in fund continuation of the projects without a for-profit company to raise the money and all that. So that's where we're at right now. And the ask is, we're basically saying that our coin has never been priced yet in the open market. Has no speculators involved, and we're also at an interesting point where we have no VC investors over our head. So all we want to do is get our coin to the public market, to the secondary market, and see what they value it at. Right now we're pricing it at number 617. So we're looking to raise, let's say, like $180,000, $200,000 at 3.5 million market cap, and based on these parameters, if our coin will be priced at the same price as game credits, that's a 4,000% return. As Ripple is a 1,000,000% return. And, these are just the facts. So this is the opportunity that we have right now. And, it's really, what we're at and what the next leg of this trip is.
So Jay, where are you located?
Right now, I'm in Walnut Creek. I'm in Northern California, near Oakland.
So this coin in this application, you're only in the NFL football fantasy. Is that correct?
So yeah, it's only NFL. So in theory, it's any gambling on NFL, but right now it's fantasy points.
Right. And how many active participants do you have on the platform right now?
So it's hard to tell exactly how many people are unique. 2015, there were 169 users. 2016, 100. So, there's maybe a couple of thousand unique users. And these are all real users.
And are these markets in-game dynamic? Are they dynamic markets that take place during a game?
So they're not during a game.
Okay.
Here. So it's once kickoff starts, there's no more action. Besides,
I'm sorry, I didn't catch.
so there's no action once the game starts. So so right now you have Adrian Peterson, right? Of
Washington.
So we could buy him at 14, right? So we're buying the week 13 contract with Adrian Peterson, and so right now it's as soon as the kickoff starts, there's no more action.
What result am I buying, or did you just buy?
The number of fantasy points scored. So
okay.
Right now I say 14, and if he scores 15, I get 1 times 100. And
Okay.
then- and this will just get tweeted right now. So here we go. Here's the trade we just made.
Okay. Where is your criteria for how a player scores fantasy points?
Right. So it's PPR,
Oh, scoring system. Okay.
and it's standard PPR scoring. So points per reception.
Where is that data derived from exactly? Is there a single point where it pulls from the web, or how does that work?
So that's kind of what the white paper's about, is how you actually get the data into the blockchain. So what you do is, as a user, unless you plan on bringing your own data. So in theory, all the users could bring their own data, but in practice, you assign an agent for you. There are a couple of providers. FantasyData.com is one of them, but there's, let's say, 4 or 5 different websites that provide the data, and there really is no central place. Yeah.
So in a way, those act as nodes.
Those act as
Oracles.
those act as, yeah, they're kind of like your. The point is, right? The point is that everyone knows what happened. It's just a question of getting it in. Everyone's a full node, but unless you have to pick a provider of data.
How do you handle stat corrections? Because it sounds like it could make a difference between a fairly large amount of money, possibly, and pretty much every week there's at least like 30 stat corrections.
Yeah. So if we reach consensus on the wrong stats, we're going to use the wrong stats. But it won't. It's really we're not talking about like options or any. The differences won't be that much. So there's nothing binary happening. It's all consensus. So yeah, it could be that you could have a really large position, but it's going to be 1 or 2 points. However, obviously a major event, could be dealt with. But that's a good question. It's really hard for the user interface to make everyone wait till next Thursday. So at this point, we're just going with what everyone thinks happened. And so far, it's been fine.
Is there what would be the legal hurdles for you if you wanted to just do it or have the platform trade binary outcomes, just money line on a game or a game with a point spread?
Yeah, that's actually something that I think will be pretty even easier than what we did, especially with everything moving in that direction. So just betting on the point spread, right? We could easily do that. I don't know, what the legal issues could be. So since it's decentralized, there's no issue. But if somebody wanted to like make a company on top of the other protocol, then it could be issues.
And so how many tokens are out there right now?
Okay, so it's based on the number of fantasy points scored. So we started at 2014. Let's just say there's about 50,000 fantasy points a season, and 14, 15, 16, 5. So about 5 million a year. So there's about 25 million coins outstanding.
Okay, and how, can you explain to me again, how are they, how are fresh coins generated?
Okay, so you guys, everyone could take out their phone and earn coins for tonight's game. That's exactly how they get generated. So basically, I'm going to do it right now. I'm going to click average, and I'm going to make a prediction for every player for tonight's game. I'm going to hit send. And then after the game, we know what Travis Kelce scored. Based on his 40 points, these 4,000 coins are generated to all these guys based on their predictions. So predictions are free, and whoever's the most accurate gets to split all the coins. And we've been doing this since 2014. Now, since there is no price and there's no FOMO, the only people that were playing were people either understood it or interested in just getting off the leaderboard. So that's how the new coins are created, and it's just going to go on forever. So there'll be 5 million new coins every season forever. So I guess there's an inflation rate at a lower percentages.
Oh, you mean there's an ever decreasing inflation rate as years go by?
Right. So right, exactly.
Okay.
So 2014, we had no users, and we got all the coins. Now there's something else on top of, which is called skill. So when you earn your coins, you get skill and stake. When you transfer your coin, you only transfer away to stake. The skill gives you the rights to sign blocks and stuff. So we had
The rights to what?
to sign blocks.
Okay,
It's called proof of skill.
okay.
We solved the problem with proof of stake by making this skill non-transferable.
Mm-hmm.
Anyway, it turned out we ended up as a company, we ended up with 25% of control of the system. So what we did last year is we divested our interest of control by giving 2.5 million coins to our investors, and the other 2.5 million we sold to make it more distributed. We actually still have a couple of more coins on the sale, but so not only is it given out to the skill of predicting, it's actually controlled by the skill. So the entire system is controlled by the set of skill of predicting NFL results.
So when a skilled entity signs a block, do they get a reward? I'm not.
There will be, I guess, there will be transaction fees at some point.
But right now, there's
No, right now there's no.
say incentivized to sign. Like Sunday's transactions, I assume, go on to a block. Is that what we're talking about?
So what I just did just now, Bob. So Bob's the name. I just signed. So someone just created an account. So everything you do is a transaction, and every transaction goes into a block. Yeah, I guess. First of all, you run the system. One of the ideas is you have a GUI that gives you, it's like a Bloomberg terminal. In the background, you're signing blocks, by default. So just by running the software, you're securing the network. If we need to incentivize people, then there'll be a transaction fee. Right now there isn't, but next year for sure there will be something for because we're open to
Oh, you said that.
creating too many accounts.
And explain to me your investment raise and path so far. How has it been successful, and any legal hurdles, especially if you're selling a token as part of the raise?
Right. So our raise thus far was interesting. So we raised a VC angel fund, and then we, for this for-profit company, which no longer has a business model. So instead, we're putting all the eggs in the actual token, FantasyBits. So we converted those guys to Fantasy. So there was no ICO, and that was it. So there was no token raise. However, we did, as a company, as the company's turning from a for-profit to a nonprofit, we had assets, tokens, and we sold. We're in the middle of selling 2.5 million tokens for 10 cents each, let's say, so $250,000 for Bitcoin, and that was done as revenue. That was done as a product, so we kind of we owned the coins and we just sold them as a coin, not as a raise at all. And moving forward now, and to move forward for the next 10 years, it's not even us raising the money. It's like a bounty. So someone that we want to put on this event, Proto Fund, it wants to put on this event, and we want to get listed on the exchange, and the exchange listing fees. And so instead of doing a raise for a group that's going to, take the money and do things, it's actually specifically for a specific content. Bob comes in. It's all about removing the middleman completely from all these places. So if we could actually have the investors' money go directly to the exchange for the listing fee, and then the FantasyBits come from a third party, or someone who donates the coins for this project, you don't have any of the issues of money transmitter or any like that, and it becomes totally decentralized. And this seems like what the SEC means when they say things like, Ethereum and Bitcoin are decentralized and, not part. So we're kind of saying that we belong in that place.
Did you follow what he said?
Yeah, a little bit. Whenever he does anything complicated on the screen, we lose his audio.
Oh, okay,
That's what's happening.
gotcha.
So when does Jay, when do you want to finish this funding round?
So we want to do this event on the 4th of February, and we want to get listed. So by January 1st, it's not a lot. So we don't want to make a big thing out of it. And once we get, assuming we get listed on the secondary market, then we could go from there. So, for example, I don't know if you can't see my screen, but personally, I'm holding 659,000 coins. I think they're worth $1 million. but there's no liquidity. And everyone else involved in the project, even the users, everyone's just holding coins with no liquidity. So what we're just trying to say to the investor is, we're just paying you for liquidity till we could get to a secondary market. And this is like a bridge funding. And then from there, we'll see what the market prices us at. And at that point, go on to the next stage.
So you be selling your tokens that have already been generated to investors.
We're going to, what we're actually doing is Proto Fund is taking donations. So I will donate tokens to Proto Fund. Proto Fund will sell the tokens to the investor and give the Bitcoin to the exchange and the service providers. This it's kind of weird when you have a decentralized project raising money. It's kind of weird, right? Like who's raising money and who's just a free rider. So you kind of, like we're donating tokens to this fund called Proto Fund.
Okay.
This is kind of an unrelated question, but Jay, after 2017, when you added the mobile apps, do you have the ability to sort of discern if it's more desktop users or mobile users that have been using your service?
Yeah, as soon as we launched mobile, it was all mobile users, which is a shame. It was mostly mobile users, but that's not. That's more of a centralized. It's hard once people see mobile. They just click on that right away.
Are you more interested in getting desktop users that might be using algorithms to sort of constantly have liquidity in the system?
So for the actual futures exchange itself, yeah, I mean that's like the next step would be actually getting real like market makers for futures exchange and getting users. I think we're not sure which way it's going to go. I mean, but yeah, I think desktop is for sure the way to go. Fantasy guys do desktop, traders do desktop. So, and then the mobile will be a companion app.
Thank you.
Did you want to talk about a code audit or anything?
Yeah, so that's, so there's a whole plan in place to do things like a code audit and, to get to the point of being, full nodes and all that. And, that at that point, once we have liquidity in our coin and we're listed, we can actually use our coin itself as currency to get these things done. But yeah, so code audit is kind of important for, especially for the swap, for example. Anything has to do with Bitcoin, yeah.
Jay, this is exciting. How do we participate if we want to participate on the small side?
Okay, so if you actually have Bitcoin, it's easy. There's still, I don't know if you can still see my screen. There's actually still like there's actually still some coins left from this distribution event. So there's 499,000 coins left. Where you just download this app. Oops, see my private key. You download this app called FantasyBits Scale Sale, and you send Bitcoin the address, and you get FantasyBit. You actually get you actually get the skill as well. There's about, the problem is there's about only 400. See, one of the issues we have is we don't even have anything to sell. Right, we only have 400,000 coins left, and that's like $40,000. But so that's the old sale. That's the easiest, quickest way to get involved. But to actually fund this event, it's going to be more of, just reach out. We're looking to raise, to get listed on exchanges, about 10 Bitcoin, 10, 15 Bitcoin. We have Athena.Trade. And then this event in Chicago with the marketing and all that will be another maybe 5 to 10 Bitcoin. And getting FantasyBits. So it doesn't have to go through the whole atomic swap situation. That